Welcome back to the channel, and if you're new here, make sure to hit that subscribe button because today we're diving deep into one of the most recognizable brands in the world. We're talking about Sbux Corporation, trading under the ticker symbol SBUX. A stock that's currently priced around $100 and could be sitting in your portfolio right now. But the real question is, should it be? Is this the right time to invest in the coffee giant that has a store on practically every corner? Stay with me, because by the end of this video, you'll have all the information you need to make an informed decision about whether Sbux deserves your hard-earned money. Let's start with the basics, because understanding what you're investing in is absolutely crucial. Sbux isn't just a coffee shop, it's a global phenomenon. It's founded back in 1971 in Seattle, Washington. This company has grown from a single store selling coffee beans and equipment to a worldwide empire with over 38,000 locations across 85 countries. Think about that for a second. 38,000 stores. It's more locations than McDonald's has in the United States. When you walk into a Sbux, you're not just buying a cup of coffee. You're buying an experience. And that's what sets this company apart from its competitors. The ambiance, the customization options, the loyalty program, it all creates an ecosystem that keeps customers coming back day after day. Now let's talk numbers, because as investors, that's what really matters. Sbux generates annual revenue of around $36 billion, which is absolutely massive in the food and beverage industry. The company operates through three main segments. North America, which is their largest market and accounts for roughly 70% of total revenue. International, which includes markets like China, Japan, and the United Kingdom. And channel development, which involves selling packaged coffee and tea products through grocery stores and other retail channels. The North American market has been incredibly stable for Sbux, with consistent same-store sales growth driven by both increased customer traffic and higher average ticket prices. But here's where it gets really interesting from an investment perspective. China represents the company's second largest and fastest growing market. Sbux has been aggressively expanding in China, opening a new store roughly every 9 hours at one point, and they're targeting 6,000 stores in that market alone by the end of 2027. But before you rush to buy the stock, we need to talk about the challenges, because every company faces headwinds, and Sbux is no exception. The company has been dealing with some significant issues lately. Labor relations have been tense, with workers at hundreds of stores across the United States unionizing and demanding better wages and working conditions. This creates uncertainty around labor costs and could potentially impact profit margins going forward. There's also increased competition, not just from traditional coffee chains like Dunkin' and Tim Hortons, but also from fast food giants like McDonald's and even convenience stores that have dramatically upgraded their coffee offerings. You can now get a decent cup of coffee for $2 at a gas station, which puts pressure on Sbux to justify their premium pricing. Consumer behavior is also shifting in ways that could impact Sbux. We're seeing more people working from home post-pandemic, which means fewer morning commute coffee runs. Younger consumers, particularly Gen Z, are more price-sensitive and less brand loyal than previous generations. They're also more health-conscious, which could impact sales of Sbux higher-calorie, sugar-laden beverages. The company has responded by expanding their food menu and introducing more plant-based options. But it remains to be seen how effective these strategies will be in attracting and retaining younger customers. Inflation is another major concern. Coffee beans, dairy, labor, everything is getting more expensive. And while Sbux has pricing power to pass some of these costs on to consumers, there's a limit to how much people will pay for their daily latte before they start looking for alternatives. Let's dive into the financial health of the company, because this is where you really get a sense of whether Sbux is a solid investment. The company has consistently generated strong free cash flow, which is money left over after all operating expenses and capital expenditures are paid. This free cash flow allows Sbux to return value to shareholders through dividends and share buybacks. The current dividend yield is around 2 to 3%, which isn't spectacular, but it's reliable, and the company has a history of increasing that dividend year after year. Share buybacks reduce the number of shares outstanding, which increases earnings per share and can boost the stock price over time. The company's balance sheet is reasonably healthy, though it does carry a significant amount of debt, around $13 billion. This debt was used to fund expansion, renovations, and shareholder returns, which can be a smart use of leverage when interest rates are low. But with rates having risen significantly, debt servicing costs are now higher. The valuation is another critical piece of the puzzle. At around $100 per share, Sbux is trading at a price-to-earnings ratio of roughly 22-25 times, depending on market conditions. Is that expensive? Well, it depends on your perspective. As compared to the broader market, it's fairly in line with other consumer discretionary stocks. Compared to its own historical averages, it's actually on the lower end, which could suggest that the stock is undervalued relative to its past performance. However, you need to consider growth prospects. If the company can successfully execute its expansion in China and other international markets, if it can navigate the labor challenges and maintain its premium brand positioning, then a PE ratio of 25 might actually be quite reasonable. But if growth slows, if margins compress due to rising costs, then the stock could be fairly valued or even overvalued at current levels. Let's talk about the growth catalysts, because this is what could drive the stock higher from here. First and foremost is international expansion, particularly in China. Despite some recent slowdowns, China remains a huge opportunity for Sbux. The middle class is growing, coffee consumption is increasing, and Sbux has a strong brand presence there. If they can capture even a fraction of the Chinese market potential, it could drive substantial revenue growth for years to come. The company is also investing heavily in digital and mobile technology. The Sbux mobile app is one of the most successful in the retail space, with millions of active users who order ahead, pay through the app, and participate in the loyalty program. This digital ecosystem creates customer stickiness and provides valuable data that Sbux can use to personalize marketing and optimize operations. Innovation is another key area. Sbux isn't just sitting still, they're constantly testing new products, new store formats, and new service models. They've introduced drive-through-only locations, pickup-only stores in urban areas, and even delivery partnerships with companies like Uber Eats and DoorDash. These innovations help the company adapt to changing consumer preferences and reach customers in new ways. The loyalty program is also a massive asset, with over 30 million active members in the United States alone. These members spend significantly more than non-members and visit more frequently, providing a stable base of recurring revenue. So, what's the bottom line here? Should you invest in Sbux at $100 per share? Well, that depends on your investment strategy and risk tolerance. If you're looking for a stable, dividend-paying company with a strong brand and global presence, Sbux could be a solid addition to your portfolio. The company has weathered multiple economic downturns, changed consumer trends, and increased competition over the decades, and it's still standing strong. The dividend provides some income while you wait for capital appreciation. The company's strong cash flow generation provides a cushion during tough times. However, if you're looking for explosive growth, Sbux might not be your best bet. The stock is unlikely to double or triple in the next year or two, unless something dramatic changes. For long-term investors with a moderate risk tolerance, I think Sbux represents a reasonable opportunity at current prices, especially if you believe in the international expansion story and the company's ability to maintain its premium positioning. The risks are real. Labor costs could rise, competition could intensify. Consumer preferences could shift away from expensive coffee drinks, but the company has proven its resilience time and time again. My personal take, and remember this is not financial advice, is that Sbux at $100 offers a decent risk-reward profile for patient investors. You're not going to get rich quick, but you could see steady appreciation over 5 to 10 years, plus you'll collect dividends along the way. Before you make any decision, do your own research. Look at the latest quarterly earnings reports, read what analysts are saying, consider your own financial situation and investment goals. And if you found this analysis helpful, please smash that like button. Subscribe to the channel for more stock breakdowns like this. And drop a comment below telling me what stock you want me to analyze next. Are you bullish on Sbux? You think the best days are behind them? I want to hear your thoughts. Till next time, invest wisely, stay informed, and I'll see you in the next video.